All right, this is my indicators, the indicators that I use, and there's a reason for them. I mean, I've been trading for since 2000, so 15 years. And just like most other traders, I've had good days, I've had bad days, and at the end of the month, we seem to come out net zero. And then, of course, you guys that are on here right now, you know that I've lost just about every single thing that I've owned because I got sick. Well, when you try and get back into trading under those conditions, uh, you tend to be gun shy. You can't pull the trigger. You don't want to lose any money. So I had to come up with something that would work for me to help me get in, help me stay in, help me get out. I needed early warning systems so that if I don't see that early warning system, I'll stay in the trade long enough to make some money. So for the benefit of this being on YouTube for you guys, in case anybody else finds it, a disclaimer. I am not giving investment advice. I am sharing with a couple of friends what I use for my own personal trading, for my own personal indicators. I'm not telling you what to do. I'm not showing you should do this or telling you that you're going to make lots of money. I'm not saying that. Trading is trading. We're all responsible for our own actions. So as a disclaimer, this is what it is. It's just me sharing with a couple of guys what I do. Okay, so this is the mini S&P, and I have two lines on here. They're always on my chart, but basically they just have a meaning to me. The red line is basically the close of yesterday, and the reason why that's important to me is that's approximate yesterday, is because whatever the market does during the night, market opens up 9:30. Eastern time, usually at some point it's going to go back and hit that line, or a good chance it will. This line here, this magenta line, is actually a moving average on a 25-minute chart. And when I'm looking at a 1-minute chart or 5-minute chart, I know that a lot of times price will come back and hit this moving average. So even though I'm not looking at the 25-minute chart, I know where it is. So if it's getting around that area, I'm like, okay, cool, it's going back and testing it. Excuse me. Okay, so price bars are green. We got some background noise here. I got to mute people. Okay, that was Carrie. Um, price bars are green. You can make them red, green, whatever you want, any color you like. What I'm doing is I've taken my bars and I've made them a color that I would like to represent a bullish condition. And then I'm going to make an indicator to paint them bearish when it's a bearish condition. So right now, all I do is mark all of them what we call hollow bars, so you can still see what a close is, but they're all the same color. But we're going to change them red and green, or you can do blue and green, blue and red, whatever you want, whatever you want. Down at the bottom, I have Woody CCI. Now, CCI, I don't know if you've ever used it or not, but CCI, I think, is probably the most documented research indicator on the planet, and partially because of Woody. Woody, obviously he's a full-time trader, but he has turned around and trying to help people. But he found this indicator, which was actually designed for something else, and he found like, whoa, this thing really works cool, for the markets, for trading the markets, for trading futures. And the more and more he studied it, he started adding things to it. So all of these colors represent certain conditions for him and the people that he teaches. But in a nutshell, it's probably the closest thing to price as you can get, being something that's a derivative price, but it's probably something that's most closely representative of price compared to anything. But it's linear, so it's set up as like an index. And the zero line here, the middle line, is 0. The one above is 100, the one below is minus 100, one above that is 200, or minus 200. Now, here's the thing. We normally use moving averages to show us support. Like, we might have a 21-period moving average, and it'll come here and swing along and touch here, right? And actually, Linda Raschke calls that the holy grail trade. If there's any trade you can take, something that breaks through the 21, comes back over it, and comes back and touches it, that's one of the most profitable trades that we can get, okay? But what happens if it crossed through over here? What happens if it crossed through down here? It got close. So there's a lot of interpretation when we use moving averages, and I use them. But with CCI, each one of these lines represents support or resistance at that point in time. Okay, so if this comes down to here and tested, it came down and tested the 200. Then the next one was a test, but that was divergent. So we have this little peak here, which was this one here, and we have this lower low, a lower low, right? But that's a higher low on CCI. It's showing divergence, but it tested an extreme. So this being 200 is an extreme. So if we were testing a 21 period moving average, okay, you know, it was probably a holy grail trade. But this was saying, hey, we tested the extreme, we got a divergent pullback, and now when it crosses the zero line, we can go long. So basically, we have all kinds of patterns. If you Google Woody's CCI Club or Woody's CCI Manual, it'll give you an incredible amount of patterns and scenarios, and they actually trade the markets using the indicator and not price. Or they'll have price squished down at the top so that it's basically inconsequential, but they're actually trading the indicator. That's how accurate the indicator is. And then he tells you what not to do, and there's one thing I actually did anyway, but that's for me. Again, I'm looking for a certain crutch. But anyway, CCI, if you're above zero, it's basically a bullish. If you're below zero, it's basically bearish. So one of the first things I did was like, okay, I don't want to look up here and then look down here and look up here and look down here, look up here, I want to focus on price. I want to focus on the candlesticks. I want to focus on the patterns, but I want my indicators to tell me when certain conditions happen while I'm watching price so that I can be aware of that condition changing. All right. So if you notice, there's actually two CCIs down here. The one is a normal, which is 14 periods, and then the faster one is a 6 period, which he calls a turbo CCI, and that's cool because this like almost tested the 100, but the 6 bounced right up to zero. So you know there's certain times when this thing really helps, or when the thing takes off and it's above the 14, but then crosses below the 14. You know, there's certain times when that really pays off. Are you staring at it all the time? No. So anyway, the first thing I'm going to do is I'm going to open up my indicator panel over here. I'm using Trade Navigator by Genesis Technologies. I love it because I'm a moron. You know, some people can sit there and they can make all kinds of code and make all kinds of indicators. Me, I'm just a simple-minded guy, you know, and I can do things with Trade Navigator that I can never ever do, you know, with some of these other charting programs. I mean, I could do it, but you know, one time I'm working with eSignal, and then I move over to, it's like every time I change charting programs, I have to learn all over again. But with Trade Navigator, it's easy for me. So one of the things I'm going to do is. What I want to do is take this zero line, this bullish and bearish, and transfer that up to price using a highlight bar. And what I can do is go over here to CCI, and I've already done this. I'm just going to turn it on. But where to go? I got to find it here. All right, actually, it's not there. I'm going to show it. It's over here. So what I've done is I've created a highlight condition. And the highlight condition says if CCI is above, I want it to be bullish. If it goes below, I want it to paint the bars red. So you can see all by itself that if we came through this pullback, and even if we draw, and you can use any technical thing that you're using to trade, like if here I would use a trend line. You know, I'd pick off of here, and when it breaks through, you'd say, okay, I can go, right? But here, as soon as that bar turns green, I'm actually looking for it to cross the trend line, but I'm actually looking for the bar to turn green, because that would tell me without even looking that CCI has crossed the zero line, and boom, the bar turns green. Sorry. And the bar stays green all the way up to here. Now there's a pullback. Now conditions have to be met in order for for me to go short. Sorry, keep hitting my right mouse. But here's a cool thing. I mean, if I was looking at this pullback and it went from red and then turned into green again, I'd be very interested in that. And while it's happening, if this turned red, I can quickly come down and scan it and say, oh, it's testing the zero line. It kind of popped through for a second, but then it came back up. So there you go. A bounce off the zero line reject, they call it ZLR. That's actually one of the coolest trades you can take. So this is actually really important for me to see it. And if I'm watching this happen and I'm watching and it turns red, but then it turns green, and I look down here and I see the spike turn on the 6 and I see it bounce off the 0, I'm ready to get back in. Okay. So that's pretty cool. I mean, it's telling you, boom, you can go long. And then over here, maybe I need conditions, and maybe this condition was pretty sloppy because it's testing the 100, right? But then when it came up here, it never got past the 100. It didn't hit the extreme of 200, and it couldn't hold it. It was facing resistance, broke back down. So when it breaks down the zero line again, or especially a reject of that zero line, I would definitely want to be a seller. So when these bars happen to turn red, that's a really cool indication for me, me personally. Now, what I like as an aircraft mechanic, aviation for 40 years, I like more than one thing telling me to do something. I like a light to go off and say, do this, or a light goes off and says, danger, warning, warning, you're over-temping, you're overheating. So I like more than one thing telling me what to do. So one of the things I can do is I would use the moving averages. Now, everybody out there will tell you cannot use moving averages because they're a lagging indicator. You cannot use moving averages. They're too slow, blah, 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 blah. Well, one of the things I found with Fibonacci is certain moving averages work really, really cool. And of course, markets are different. If you're trading the ES versus the mini Dow versus the NASDAQ, the NQ, they might be slightly different because of the dollar value. So they move different. The range is different. And the indicators might act a little bit differently. But one of the things I found is that a 5-period moving average, simple moving average, I mean, you can play around with it, but a 5-period moving average is pretty darn fast. But what I found out also is one of the coolest things you can do is run parallel moving averages. And when I say parallel, that means two of the same. So run a 5-period and a 5-period next to each other. Now you're saying, well, wait a minute. If you ran two of them together, a 5-period simple and a 5-period simple, you would say, what the heck? They'd be on top of each other. No, you kick one out, one bar. And this is what that looks like. If I add a simple moving average, you see now all of a sudden there's two of them. But look at the cross. Look how fast that cross is. So here I'm getting a cross condition and the bar is turning green at the same time, which is pretty cool. Now up here it crossed bearish, but the bar stayed green. And when the bar turned green again, well, the thing crossed back. So I'm getting two things at the same time. And they're very, very fast. And depending, I have the chart smooshed a little bit here, but when you open up the chart, it's really clear to see that there are times when the two lines are really close together. And of course, that means congestion. But when the market takes off of volatility, the lines open up. Now, if I got in on this bar on a lower time frame and I see that the two lines are far apart, I know that there's no way this market can turn around on me that fast. If moving averages are far apart, the market has to slow down in order to turn. Unless you're talking about a Fed announcement and you're trading the Fed announcement, basically markets don't turn on a dime. They slow down. They go through this exhausting period, then they kind of slow down, and then somebody up there goes, sell, and all of a sudden the market starts to turn. Well, when you have a moving average that spreads apart, I can see that there's no way if I got in on this bar or this bar in a lower time frame that is going to turn around fast. So these are just things that I look for. And then, these two being exactly the same, they cross like immediately. One bar closes low, boom, that moving average changes. Why? Because they're the exact same bar. The difference is one bar ahead. One moving average is ahead by one bar into the future. The other one is in the present, and the one in the present crosses the one in the future. So that's what makes a difference. Now, wouldn't it be cool if we can change that color at the same time? And then the green bars and the red bars would coincide with the color change of the moving average. So, we do that. And, wait, not that one. Okay, so there you have it. Now I can expand this so you can see it a little bit better. Okay, so you can see right here, I have a magenta, which is the moving average is bearish, right? The one in the present crossed over the one in the future, so the line turns bearish, or magenta. Now here, look at this. Right here in this bar is red, the moving average is magenta. This bar turns green, the moving average turns blue. I mean, is that fast or what? So when all the experts tell you, oh, you can't you can't trade a moving average crossover, they're full of baloney. It's just the way they're using them. Yeah, if you use a 10 and a 20, you're talking about 10 to 20 bars. But when you're talking about a 5 and a 5, it can go really fast. Now, you can play with this. I used to do an 8 and an 8, and a 10 and a 10, and a 3 and a 3. I found that 5 works the best. A 5-period moving average always seems to work best for me. And it's a Fibonacci number, so that's where it comes from. And then again up here, the bars stay green, and here, if you can barely see it, the line turns magenta, and then boom, back to blue, and there you go. Now here, you got a little bit of volatility, so if you got in and you use this as a stop, you would have got stopped out. It depends on what you're using for a stop. And I add a stop to this as well, a parabolic, so that I have something mathematically telling me what to do. I don't want to run on my emotions. But anyway, now we have two different conditions saying the same thing. So here, what do we have? We have green bars, right? But we have a magenta moving average. I can't take that trade. Up here, I can't take that trade because they don't line up with each other. They disagree with each other. The bar is green, line is magenta. I can't take that trade. Now, here it does, okay, but I'm going to add another indicator in a minute so that I have 3 things telling me what to do. But here, I got a red bar, but remember, when this crosses and I'm looking for something to change, I'm looking down here going, what's going on? And I look at CCI and say, well, this is bullish. Okay, this was divergent. This is up here a little bit, but we got a peak here, and a lower high on CCI. And then I have a higher high with, again, a lower high. So if I disregard this one, I still can draw a line and say, this is divergent. This is going to turn. But as this thing comes down, it's bouncing off the 100. Remember, it's turning. And CCI, the 6-period, the turbo, is actually divergent. So things are telling me that I don't know. I mean, it's turning, and I know any corrective phase has 3 waves, and you never want to take the first 2. So, when this pulls back, I'm like, okay, I'll take the next one. And when I take looking at the next one, going, well, I don't know, I don't know if I want to do that. And then also, I'm always screening a higher time frame to determine whether or not I need to be in which direction. So if the higher time frame is bullish, I will only take longs on the lower time frames. If the higher time frame is bearish, red, magenta, and I have a trigger symbol that I'm going to use, I have to have all 3 of those on that chart in order to take these trades over here. And this way, I'm always going in the right direction. I think of trading as not knowing the right direction as being as important as knowing which direction not to take. I'm not looking for the winning trades as much as I'm looking for the losing trades that I do not want to take. And that puts everything into my favor when I'm trading properly. So then it turns back to green here, and you might have taken this. You might have said, well, okay, but I would have looked at it and said, this is a little bit weak compared to these pullbacks, and plus I got divergence, so I don't know. And then this one comes up, and it's struggling at the 100 line. And remember, it doesn't matter which line it is, but that is support or resistance for the moment. So It's kind of like a moving average, but it is support and resistance for the moment. And again, you can refer to Woody's CCI manual, and they're just like experts at this. But anyway, the bar turns green, the line turns blue. I could take that, get my finger up the right-hand cursor, the mouse button, but you want everything in place, and this might have been a weak trade. I probably would have taken this, but if it starts to show up weak or it's struggling at the 100 line, you're like, danger, danger, and then you default to your stop, move your stop up close. And then here we go. Now we got another one, and now I can clearly see, well, this is A and this is B, so I definitely want to take C, because if this is a C wave, if based on just what I see on the chart, not looking at a higher time frame, but if this was a corrective pullback, typically C will be at least what A is. So if I know that, actually I'll put it on the chart. If I know that A was here, and I know that B was up to here, I know that it should go down at least to the 100 line. If it's not purely a corrective move, in other words, it's not going to go right back up again, it may go further than that. And here it did. It went down to 1618 very easily. But anyway, I don't take this move, and unless I think the market's going to keep going in that direction, I won't take this move. What I want is the next one down. Or if I see this, 1, A, B, C, I'll take the next one in the next direction. But anyway, that's a different video. That's what goes through my mind. So, okay, I have, as an aircraft mechanic, I'm looking for backup systems, and now we have bars turning red when CCI is below the 0 line. Okay, that's one condition that we're looking for. We have confirmation with a 5-period moving average, which is really, really fast. So we can get, two conditions here telling us that we can go in this direction. Over here, look how well it worked for a bullish move. There you go. It worked really well, right? Look down here. Boom, boom. You see how wide the moving averages got? You know that if you got into this bar or this bar on a lower time frame, like a 1-minute chart, pulling a pullback on a 1 minute, you know that these things are so far apart that it can't turn on a dime. And there you go. Here's a bullish. Then you got this one. Then you got this one, which is bullish. Then this one. You see, it's turning, but it doesn't turn on a dime. So if you got into one of these bars on a 1-minute chart, it would be pretty clear what's going on, because now you're getting higher highs and higher lows. Something is telling you, warning, warning. So now the only thing is, if I have two things telling me what is a bullish condition or two things telling me what a bearish condition is, what I need now is a little bit of help in these areas, these pullbacks, to tell me pull the trigger. What I will also want is, if I'm using a trailing stop, I want to know when I should be holding my stop back and letting this thing run and give it some breathing room. And I want to know when I should crank that stop up right up close and personal. So I want an early warning sign. So I did something to CCI that Woody says don't do. And what I did was I added a moving average. What moving average? A 5-period moving average. Because, again, I've tested a 3, I've tested an 8, I've tested a 10. 5 seems to work the best. It's not too fast, it's not too slow. And it crosses at a really cool time. So now if I go to Woody CCI, I double-click on this, and it opens up. I'll come down here, and I'll find, of course I can't find that stupid thing. Oh, there it is. 5-period, simple moving average. Boom. Okay, so now I added a 5-period moving average to my CCI. So here you watch this thing come up. I'll put a crosshair on it so you can watch it. Now it's coming up, it's coming up, it's coming up, it's coming up. Now on this bar, like right here at the top, at this bar, I'm getting a cross. And then it kind of goes into a sideways congestion. And then bam, I get a cross. Now, we did have that one high volatility bar there. That's the way it is sometimes. Well, there you go, 9:25 in the morning, 9:50. So there you go. This is the open of the day. But what you're seeing is when I'm getting these crosses, like this top here, this little top, Should I stay in? Should I get out? What should I do? Should I crank up my stop? What should I do? Well, if I knew at the moment that it was crossing the 5 period on CCI, that would give me a pretty good indication. And then it goes through a congestion area with this red bar, and then it turns green, but now I got a magenta. I'd really like to go long, but, wouldn't it be cool if I got a trigger to say buy now? And then the bar is green, the line turns blue, and it prints something on a chart that says buy now. That would be a really cool trigger. And at the same time, now I have 3 things telling me that I'm allowed to go long, or 3 things telling me that I'm allowed to go short. And it's also giving me an early warning that a top is forming, because CCI is very, very fast. Like right here, down here. When that 5 period crosses, it would be putting a signal up here, right here on this bar, the very top bar. It would give me a signal, a warning that the market might be turning. I mean, how fast do you want it? So anyway, we make another indicator, another highlight bar, and we call it CCI bullish moving average cross or bearish moving average cross, and we go like that. So now, okay, in order to go long, the bar has to be green. I'll turn this off for a second. In order to go long, we're anticipating a long condition based on a higher time frame or whatever the market's doing. Plus, I have divergence down here, so I'm looking for some sort of a pivot, right? What I need is I need 3 things. I need the bar to be green, I need the line to be blue, and I need a blue marker. What happens is I get the blue marker first because CCI is very fast. And by putting a 5 period moving average on it, even though they say you can't use moving average crossovers, even though they say that, this works pretty darn cool for moving average crossover system. So the first thing that happens is I get a blue indicator that says, hey, this might be turning, which is really good for me to know if I was going this way. But if I'm anticipating a bullish move, I want to know early when it's coming. So boom, I have an indicator saying it's going to go bullish. And then as soon as the bar turns green and as soon as the line turns blue, I can enter. Is that a cool entry or what? Now, it comes up here, and boom, I'm reaching a top, and it's saying warning. It's just a warning. If a light comes on your dashboard that says check engine, if it's not red, if it's amber, if it says check engine, that could be anything. It could be O2 sensor. It could be anything. It's just a warning light, just to get your attention. In airplanes, in the cockpit, we got lights all the time that go off. You look at it, you look at the gauge, and then you push reset. And it goes off. It's just a warning to say, hey, take a look at this. Well, that's what these indicators are. So don't take them as gospel all by themselves. But if this is reaching a top in this particular swing, this is saying, hey, take a look at CCI. The red pops up. It says, hey, take a look at CCI. And you go, okay, I just had an extreme. What typically will happen, it'll come down, test the 100, and go for another run. So what I might do is pull up my stops, but the bars stay green. I'm kind of going sideways. The blue line's still blue. So I'm sticking with it, and all of a sudden, boom, I get a blue cross saying, go for it. So this is a good entry point right here. This is a good entry point right here for longs. Okay, this is not a good entry point for a long because the line is red or magenta and the bar is red. So this is not a good entry. This one, I have a blue and the line turns blue, but the bars are red. Not a good entry. This one's a good entry because it's blue, the line is blue, and the bar just turned green. See? And then for the opposite direction, is this a good short? No, the bars are green. The line turns red. Oh, here's one that might have faked you out, But again, we're above. And if you go down and look at CCI, you say, no, it's not a short condition, So then we get this one over here. Is this a good short position or a good short entry? No, the bars are green, line's blue, line turns red. This bar turns red, but go down and look. It's like, I don't know. It wasn't struggling at the 100. It just came back and the turbo was telling you, no, this is short-lived. But this one over here, it's telling you, hey, it's getting ready. And then the bars are green, but then the line turns red, the bar turns red, and the last indicator you had was red, and there you have it. You have 3 reds giving you a go. It comes down here and says, warning, warning. That's all it is saying is warning. Do you pull up your stops, or do you get ready to add another position? I got to have a button to disable my right mouse click. But But here you go. This is perfect entry. Remember I said A, B, and I wanted to take C? Well, I could have taken it here, but if I missed it, this one is perfect because the bars are red, the line turns red or magenta, and bink, it prints a bearish marker, and there's my short entry. When I get down to the bottom, one bar below before the low, it's warning me. So I get it. Even though Woody is saying don't add a moving average to the CCI, I get it. These guys are trading based on the CCI. I'm not trying to be better than them. This is my system for me personally. You know, if I have a $5,000 account and I'm using good money management skills or strategies, I can't trade or risk more than 50 bucks, 1%. Right? And you got to be on the money if you're only risking 50 bucks. In the ES, 1 point, really? I mean, you got to be right on the money. So what I need is a bearish condition in order to go short on a 25-minute. Then I drop down to the 5-minute, and I got to see it turning. And then I can drop down to a 1-minute or a tick chart. I actually use NinjaTrade. I'm trying to get this color system over to NinjaTrader because my trigger chart on NinjaTrader is actually a 12-second chart. And with 12-second, I can easily stay below my 1% money management for risk. And what's really crazy, if you can get your risk down to 1%, but then your trade is 4 times or 5 times higher than your risk, 4 to 1 or 5 to 1 return, think about that. You're risking like 1% per day or 1% on a trade, but you're getting back 4% per day. When you figure that out per month and per year, that is like your Warren Buffett. That is like some crazy, crazy returns. But it's all about managing risk. So whatever you're seeing here on this chart, it's about, okay, this is the direction of the chart, direction of the market, because it's a 25-minute bar. And then I'm going to show you, I use 3 charts actually. And then I monitor the trade on a 5-minute bar. And then I enter on a 1-minute most likely, or if it's volatile, I may pull up that 12-second chart. You can use a tick chart too. But they're always the same condition. And this way you have red, red, red on one. So now you're only looking for shorts. You're not even thinking. You don't even have to look at this chart for a while. Okay, so that's basically it. And then the only other thing I would add personally is, where'd it go? Moving average 21. I might add a 21 to it because that's another indication of whether the market is bullish because it's higher than a 21. If it's intermingling with the 21, going back, it'll bang through it, bang through it, and bang through it again for a change of direction. So that's something really good to know. And what you're looking for is a pullback to hit that holy grail where it pulls back and hits the 21, right? That's what you'll be looking for, the Linda Raschke holy grail trade. Well, here it didn't quite hit it. Okay, but then if you look down at CCI, it was like banging around the 100, and this was testing the 0 and the opposite 100, and then it pulled back and turned. So, and then the markers tell me, no, you go for it because it's below the 21 moving average. See, now I have 4 things. It's below the moving average, and I have a magenta, and I have red, and I have a sell signal. So that's pretty good. Now, you'll notice that during sideways congestion, you get a lot of buy sells, buy sells, buy sells. But if you look at the interaction of the moving averages, you probably wouldn't take any of those trades anyway. If you're looking at CCI and it's just banging around the 0 line here, that's a pullback. You wouldn't take that. You want to see some sort of expansion and volatility before you go in the opposite direction. So one of the things that I really depend on is ADX. Now ADX comes out of the can. Now you guys hang out with Michael Bork in the trading room, and he's always talking about this piercing the envelope from the bottom, which is right here. And if you look upwards where it pierces, boom. And then the whole time ADX is rising, a little dip here, but basically ADX is rising. This is really good, right? And then it falls here, but then it starts to climb again. And now we have divergence in the ADX. We have divergence in CCI. We have price hitting higher highs, but ADX is saying, hey, that the last swing was like really low in volatility, really low as far as trend goes. So you need to watch out. Now, what I've done with ADX is I've changed it. Michael makes both of these envelopes. They're actually DMIs. One's a DMI negative, one's a plus DMI. So this is basically telling you uptrend. This is telling you downtrend. If the red is above, that's something else you can use. But what I've done is I changed my numbers to meet what Gail Mercer uses, and that is a 5-period ADX. Isn't that funny? When moving average is a 5-period, ADX is 5-period. It's a lot faster. And I found that if you wanted to say, and I've done this before, it's very, very close. If you wanted to say when the DMI goes north of the negative one, positive is higher than the negative, positive is greater than the negative, it's a long trend. And look, it would have changed the color of the bars at the same time. And then here it kind of bounced, but here it went negative. And if we go up and look, well, ADX would have printed these bars red, and I would have got in. You know, I could have gotten in because I have a red, and a red, but I found that CCI is more accurate for telling me what the true story is. So that's why my bars change color based on the zero line and not based on the DMI. But I found the 5-period definitely works faster. But when we're piercing the envelope from the bottom, the original can setting that comes with ADX, which is what Michael uses. Let me see, it's this one? No, this one. It's usually like an 8 or a 14. So if I put that on the screen, I don't want to confuse you. Remember, we're looking at the white one. But if we put that on the screen, you'll see that this one here really told the story. So let me close this. This one here was showing you a congestion period and then pierces the envelope from the bottom, and it's going and going and going and going. And so it's basically telling us the same thing. The only difference is when it pulls back, the white was actually more responsive and quicker. And there's some cases like down here. Here you go again. Would you want to be taking this trade? Well, no, it's dead. You know, the market is dead. There's no trend. And then it starts to rise, but look at the 5, how it jumps out and starts to take off. And then it dips and then takes off. And if you were watching this line, it was like almost like it's not important enough. I mean, it's hardly clearing the DMIs, right? So 5 works better. Now, one of the things we can do with this is, especially when you're using a higher time frame to screen your trades, one of the things you can do is watch that ADX and only take trades on the smaller time frames when there is a trending condition on the higher time frame. So we can use it to filter out, and that means only take the trades when the ADX is climbing. Don't take the trades when they're falling. So one of the things we can do with this is turn this on. And now what we're doing is same thing with a highlight bar. We're saying if ADX 1 bar ago, if ADX now is less than 1 bar ago, paint it red. So now we're only seeing white. So now, check this out. So now I need a marker, I need a green bar, I need a blue line, and this needs to be turning white. and there's so many things telling you, okay, now you can trade. You know, here is a red, but the green bar is blue line. This turns red, right? But then I get a blue marker, and I have blue bars, and I have blue line, and I have green markers, and this is white. So, which means it's climbing. So I can take the trade. See, we have all these colors telling you that you're allowed to do the trade, but you're breaking it down to colors. Colors are easy to say, okay, go. Okay, stop. We're programmed for that. Yellow light, slow down. Red light, stop. Green light, okay, let's go. We're programmed for that. And by having 3 or 4 of these things telling you what to do, it actually gives you a tremendous amount of confidence to push the button and take the trade. And then when something comes up like this and you're short, you go, whoa, 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 whoa. That's like the yellow light on the traffic light. You know, should I get out or should I get ready to get in with more? See, that's one of the cool things about money management. I can start off at 1%. I can get into profits, but then I can add to my position here. I could get in here at 1%. I can add to my position here, and maybe add another one here. You know, and then whenever you see that red light, well, then you pull up real close with your stop. So anyway, when you look at this, it's starting to, if you looked at this from the beginning, it would look very confusing because I have all this garbage on my screen, but I'm only looking at certain things at a time. Like the blue line, the magenta, I don't even look at that. I probably should take them off. The only reason why I want them there is for the piercing of the envelope, because when I sat there and watched Michael Bork do this, piercing the envelope is really, really, really cool opportunity. Now, it might go actually in the opposite direction at first and then switch. But when you find these on a daily and weekly chart and you buy options, you can buy options for dirt cheap. You can buy $5, $10, $15 options deep out of the money, but you're buying them in the position when the market is in a coma. So let's say right here we're on a weekly chart and we bought options, and this is a weekly bars, right? If we were buying on a weekly and it was doing this where they're all on top of each other, and you bought puts and calls at the same time, deep out of the money, like down here and up here, right? They're dirt cheap. You can go both directions at the same time, and then boom, the market takes off, volatility goes up, and the price of your put options went through the roof. The calls went down to zero. But look, you bought them here, and look at all the money you're making here. See, nobody's looking at this stuff, but that's what ADX is all about. ADX tells you stay out or get in heavy, and it tells you when it's white that it's good. Red, don't get in. White, okay, it's good. Red, don't get in. You don't want to get in on a falling. You know what happens? You make money today. You make money tomorrow, or maybe not tomorrow because it's Friday. But, Monday you don't do so well. Tuesday you make money. Wednesday you make money. Thursday you make money. Then you lose it all on Friday. Or you make money the first week, second week, then you lose it on the third week, and then you get some of it back, and you break even by the end of the month. Why? If you go back and look at your trades, you'll find out that you were trading when ADX was falling. You don't want to trade. You want a trend. When the market is chopping back and forth, these guys, the big guys, are changing position. They're accumulating. Right? That's when you do not want to trade. All right, so I'm going to add one more thing to ADX. All I'm going to do is speed it up. And that's a 3-period. Now, again, it looks confusing, but I'll show you why I do that. It's a lot faster. So, this is like, it kind of turns color here, but this thing is already crossing it, and it's taking off. And anytime you go over 70, 75, you need to be wary. And, okay, this caught up and finally got there, but this got up to 95. This got up to 87. This got up to 89. So it's just another one. Now, if you look at my chart, it looks really confusing, right? What the heck is Dave doing? You go, I could never trade this way. I'm not trading this down here. I'm trading this up here. But when that blue light comes on, I take a glance down here. Okay, it's bouncing, coming off. It tested the 100. The turbo tested 0. It's going to go for another run. All right, and it's climbing. ADX is climbing. See, that's all I'm doing. This is climbing still. This had a little bit of a dip. And this one did a 180, and now it's climbing. See, this tells me go down here and look, but this is what I stare at while I'm watching. I'm watching the bars. I'm watching the candles. Is it bearish? Is it bullish? I'm watching this is what I'm doing. But when I get a light or I'm expecting the light, I look down and say, okay, this is getting closer. This is bouncing. Okay, it's getting ready. Blue light comes on. Boom, I'm in. And there you go. How would you like that for an entry? How would you like this bar right here for an entry? How would you like this bar for an entry? Now, this was the open of the day. You wouldn't have taken it at 9:30 anyway. But how would you like it for this entry? How would you like it for this entry? See what I'm saying? So this is what you're staring at, but the lights are coming on and telling you, warning, warning. Now, the only thing I add to this is a parabolic. Now, parabolic, it's not perfect, but if I had a red light come on, I would start following I would move my stop up and be riding it. And I would have got stopped out here, right? I got a blue light which said buy, but this is where my stop would have been. So I would have been at a very low stop. And again, this was the opening bar. I would have got stopped at 9:30. Well, I don't trade until 10:30 anyway. I give the market an hour or so to get it out of its system. But, over here, it wouldn't have worked so well. What it works well is when the market takes off. Parabolic stinks when the market's chopping, but it's fantastic when the market is got a lot of volatility. That's when you want to stay in the longest. So here you go. You had this, and then you get this swing. Everything is climbing. this is perfect. Now you're going down to test the 200. You know, everything is telling you it's a system go. The line spread open. I want to be following this down, but then I got a blue light. It's like warning, warning. So I move my stop to here, and I get stopped out most likely on that bar. And then look what happened. You get this expansive move, closed above the 5 period. The bars turn green. See, I would have been out already because the blue light came on and said, warning, warning. So it gives you, even though you have all this junk on my chart, or you look at it, you don't have to have that. But it's this what you're staring at. And when you're in a sideways congestion, you don't care about these lights going off because they're meaningless. You know you're not interested in it because, look, you know, you're looking for expansion. You're looking for, okay, now it's starting to climb. It's actually climbing in the wrong direction. And that's what happens a lot. But you can see divergence here. You can see it fighting with the 100. And you say, I don't think it's going to go. And sure enough, the thing snaps around. Boom. It gives you, you already had a red marker, but now line turns red. You go below the 21. You got red bars. They gave you a warning sign right away, but you certainly, this one right here, outstanding trade to get in on this one. And the parabolic at that point works fantastic. Now, this is a 25 period. I use the 5 period for my stop. So let me show you. I'm going to close this. Okay, so now you can see with the choppy area where you get all the signals, it's like it doesn't make sense. But again, it's telling you don't trade. That's more important than when to trade, because you would have lost all your money in here instead of making your money here. I'd rather be sitting here on my hands during this period and making money here or making money here than even bothering with this stuff. So it only looks busy when it's the wrong time to trade. And again, you can tell that with the parabolic because it's just not lining up. Nothing is working. And if nothing is working, that's when you're sitting on the sidelines. So what I do is I run 3 charts side by side. And they're divisible by 5. So 1 minute chart times 5 is a 5 minute chart times 5 is a 25 minute chart. That's all. When this chart, when ADX is climbing, I'm going to put a line here to show you how cool this is. If I take right here, ADX is climbing, and I got a 5 period moving cross right there. Okay? You can see the line where it crosses here, the line where it crosses here, and there you go. Look at that. You got a red line. All right? And then ADX is falling here, but the 5, the faster one, this is a 5, this is a 3. Why don't I put a line like right between the 5 and the 3, right? See that period? See that right there? Now, let's go back and see what that looks like on a 5 minute chart. I'll find those 2 lines on a 5 minute chart. Where is it? Is this not a 25? 25. What time is this? 6:05. 7:25. Okay, I didn't get there yet. Can't remember. There's 5 times as many bars on a 5 minute compared to a. Nah, that can't be right. Let me just double check something here. Draw behind indicators, vertical line. Okay, what time is this one? 8:35. Okay, something's amiss here. $4.16, 750. You know what? Let me do this over again. Delete that. There you go. I put it on the indicator instead of price because it's not showing me to show it on the other charts. So let me do it again on price. Just have to approximate there. Okay, there you go. So we know here we had a blue, but we have red and we have magenta, right? And we know what CCI is doing. In fact, now it's starting to turn, starting to turn, starting to turn. If I put my cursor on, you'll see what this looks like on a 5-minute chart. All right, we'll just take this area here. So we got a blue here, and we got a pullback. And it's getting closer. It's getting closer, right? And right about there, we're looking at this going, okay, we know if you look down here at CCI, you know that that's turning. You know that this is getting close. And right at this bar here, you have a red up here, you have magenta here. You could already be in the market because you already know which direction it's going. You could already be in the market here with very low risk, right? And then it gets to here, it's a warning sign. And then here you have your next buy signal. You can't say there's a sell signal right here, but if I hold my cursor there, look at the 25 period chart. ADX is rising, CCI is falling, great distance away from the 5-period moving average. And if I take that trade, I know the market still has a ways to go. If I look at the 25 period chart and I look at the moving average, they're far apart. I know this thing isn't going to turn on a dime. So if I get in over here on this marker and I took that trade, look at how far the parabolic is away from there. Very low risk. And I can come down here, and now I have another sell and come down here, but whoa, 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 I got this blue, but what's happening with ADX? It's falling. What happens? I'm getting divergence, divergence, divergence. See, everything is warning me here that look out, and I get another sell, but look, that's it. This is what you're looking for in a turn. Nothing turns on a dime. But now if we look at what happened right here, if you look at the 25-minute chart, I'm going to turn this off for 1 second. Look at that. That's a bullish bar. And you got the bar before it. I'll turn it back on. This bar right here. I got a signal on the 25-period chart telling me warning. And I'm seeing this price action here on the 5-minute. See what? By doing this, it's so powerful. You're looking at this going, there's trouble in paradise because this is bullish, bullish, and I got it. But then this is rejection. Here's a hammer, and the moving average. Look how close those two dips are with each other. And then I have divergence like crazy. Everything on this chart is screaming that something's going to happen over here. And boom, I get a blue light pop up on the 25-minute. And this chart over here is my timing chart. I only use it to get into the market. I never look at it. I'm always looking at the 5-minute and trying to decide if the 25-minute is bullish or bearish. But I'm always trading this. So if you look at the parabolic over here, boom, I get stopped out there. If I did take this entry, I would have been stopped out at break even or whatever, And again, I basically get in on this chart and I'll run the parabolic until I get to break even. So anyway, it may look confusing if you just looked at this, but now that you see the madness behind the method, and you notice that I'm always looking at price. Immediately, all right, this should be up here because that's where the 25, the moving averages are right now, right? And see what's happening? It's you know exactly what you're doing. You're coming up and resting on that. So I already know what it's doing on the the higher time frame, and we know that was the close for the day up here. So it's a good likeliness it'll come up and touch this at one point. But it's good just to have on the screen. And then sometimes what I do is I'll run 3 charts at a time can be confusing, or I will be looking at this when I shouldn't be looking at it. So I have duplicate charts set up with 2 time frames, and I'll stand here and I'll watch the 2 time frames. I'll watch the 25-minute and the 5-minute. This is what I'll be watching. If I want to get into the market, I might toggle and go to the trigger chart, and all that does is change the right-hand chart to 5-minute and the left-hand one to 1 minute. And that just helps me focus on what I'm doing. And you see this garbage in here with, if you look at the markers and the colors changing, it's like nothing is matching up. Everything is back and forth, back and forth, back and forth. You wouldn't want to be trading this anyway. You're looking for trades like this. And why is this happening? Because ADX is falling. See, you wouldn't be trading when ADX is falling. You only trade when ADX is climbing. Over here, see how that would have made you a winner? See how this would have made you a winner up to this point, and now it's falling. See, you only trade when this is going in this direction. And then the signals all make sense. When ADX is falling, you're getting all these buys and sells, and nothing is making sense. When this is falling over here, you're getting all these signals. See, you don't want to be trading then anyway. So it's basically telling you nothing is right in paradise. So anyway, using 2 charts, it helps you focus. Sometimes it's just days when I need 3 time frames. So, but anyway, it's 10:33. I'm going to have to leave here in like 5 or 10 minutes. This is on video, so it's going to be on video. So when I send the video out to you, you can go through it and listen to it, watch it, rewind, try again. And I think whatever questions you have will be cleared up. If you want, I can open up Carrie's mic because he had some background noise. If you have some questions real quickly. If not, I got to end this thing. And any questions? You all fell asleep on me.
Yeah, and did you hear me?
Yep.
Okay. Yeah, and the first time I saw somebody use a 25-minute chart. I understand that the CCI before I attended the Woody's CCI seminar for a few times. So I use the CCI for the long term. It's quite accurate. But
right.
For the short-term trading, I did not do it.
Yeah, the 25-minute chart, yeah, everything is divisible by 5. Cynthia Case, who is like this statistical mathematical genius, she's like a chemical engineer, she's got all kinds of degrees. She's really big into Fibonacci, and she teaches us to use a screening chart, a moderating chart, or something, a monitor chart, something that you're monitoring. That's basically the center of the universe, right? The screening chart tells you which direction and whether or not it's a good time to trade. That's it. You're done. And that should be 5 times bigger than your monitor chart. So if I'm using a 5-minute chart, and I am because I'm managing risk really low, close, because I have a small account and I lost everything because I got sick, not because I'm stupid. But so I use a 5-minute monitor chart. I use a 1-minute trigger chart or entry chart, and that's why it comes out to be 25 minutes. It could be, you could go by 3, 5, or 8. Anything more than 8, anything less than 3 makes it useless. But to have 3 different time frames that you're basing your trades on, it should be 3, 5, or 8. I found that 5 happens to work best. My moving average is a 5. Everything is based off of 5. My ADX is 5. It all ties together awesome. For me, you can do whatever you want, but that's why it's a 25-minute. You could start at a 60 and then go 5 times less than that, but then the middle chart and your timing chart is going to be, I'm getting ready, kiddo. It's going to be lower. So, but anyway, why don't we do this? I'll put out the video. I'll send it out to you. You guys can look at it again, and then if you have questions, Friday, Saturday, Monday, or whatever. One other thing is I am always in here. If you go to afulltimelife.com, chat room, I'm basically in here all day. Okay? It allows you to open it up in Java, Flash, or on your mobile phone or HTML. Just put in the name and hit connect, and you'll be in there. Now, this website is a brand new site that I'm building for people who are looking to make money and have more life, whether that life is for missionary work, for helping people, or traveling, whatever. Everybody has their own idea of what a full-time life would be. But everybody that has a full-time job has a part-time life. And what we teach, or what we're going to be teaching on this site, is making money from marketing, making money from blogging, making money from trading. So I took the chat room from christiantradingroom.blogspot.com. I took that chat room and moved it over to here. I had another trading blog called tradeaholic.blogspot.com. Those are blogger sites. So I took the chat room from those 2 trading sites and put it here. and then I took from my main blog, DaveWeber.com, I moved it here. So now I'm in one chat room. This chat room has a lot of features, and some of my day trading buddies come in from CFRN. They come in here. But anyway, this is where I'm at all day long. A fulltimelife.com/chat-room. And there you go. So if you have questions during the day, I'm in here almost all the time. But anyway, that's the new site. That site is going to be a killer. It's going to be huge. I'm taking all my effort and working on that one particular site. But as far as trading goes, I am trading during the day. I trade at a lot at night sometimes because the market moves slower. It's easier for me to grab money depending on what the market's doing. But I can actually make more money at night sometimes with the markets. They just behave better. I like trading with the England guys rather than the Americans. But anyway, I'll put this video out there. I'll send it to you. You can watch it. If you have any questions, you can get me in the chat room. You can email me, or we can talk about it tomorrow or Monday or whatever. All right, so I'm going to stop the recording. I got to take my wife to the doctor for her hip, and we'll see you guys. I'll see you two guys tomorrow. And anybody else watching the video, you know where to find me. I'm in the chat room.